We took a look at the numbers that have come out because we're just getting to the end of the fiscal year. What we find is that corporate tax revenues have actually fallen pretty sharply by 30% year on year so far this fiscal year. Overall revenues are only up 1%, and that's with growth of 3%, while spending, on the other hand, is up 5%. So what that points to is a wider deficit. The deficit is going to expand to around 4.2% of GDP this year, and that's up from 3.5% in the last fiscal year.
We're looking at numbers, because I've spent a lot of time going through these numbers too. We're looking at numbers that end on the fiscal year. We only have 11 months of that information in, and it's a combination of the pre-tax cuts and the post-tax cuts. How do you kind of break down to see where the trend is headed? And obviously it'll take a year before we get some clean numbers on this, but what do you think?
Sure. I mean, yes, it's difficult to extrapolate from just 1 year of data, but I think the trend is pretty clear that we are going to see slower revenue growth. This continues really in 2019 because the big 2 years this affects are 2018 and 2019. We do have a strong economy, so personal tax receipts are growing strongly. But the overall picture, and this is partly driven by the spending side as well, is that the deficit is widening. You have mandatory spending continuing to rise. If you look over the next 10 years and look at the CBO data, it shows that mandatory spending costs are going to rise by 2 percentage points of GDP. As the debt rises and interest rates normalize, then interest payments are going to rise as well by another sort of 1.5% of GDP. So it means that the deficit is going to widen and the debt is gradually rising.
How do you view the U.S. overall? Because of all the AAA ratings that you have for sovereigns, it has the highest GDP to debt ratios, I believe, but you also give it kind of a special position. You say it's okay in this scenario.
That's right. So general government debt, that's federal and state debt, is 101% of GDP, and that's higher than all the other AAA. So there are 11 AAA countries that we have. I think the issue is, though, that the US is exceptional. It does have very strong financing flexibility. That's what we call it. It has the US government bond market is the world's safe haven, essentially, and the US dollar is the world's reserve currency, and that gives the US sort of higher debt tolerance. We think that it can support higher debt.
I mean, actually, to that point, I was going to ask you about this kind of new theoretical framework that's getting a lot more attention now, this modern monetary theory, one aspect of which is a country that prints its own currency, especially with a reserve currency, creditworthiness essentially is a non-issue, right? There's almost no realistic limit to how big deficits could be or how much the country can spend. I know it's getting a lot of, buzz, but how would you actually think about those issues?
Well, it's true that a country that prints its own money does have an advantage. It can set monetary policy to borrows in its own currency. I think where I have a problem is that governments don't have to repay all their debt, but they do have to maintain enough credibility that people will continue to lend to them.
Right.
And I think if policy settings are such that the deficit just expands and expands and expands, then I think particularly people abroad might start to think, is this, where's this headed?
Charles,
I think in the short term, you're right.
I know people say tax cuts never. Some people try to say they pay for themselves. Other people say they never pay for themselves. So I listen to your analysis. So down 30% on corporate revenue, but up 1% overall, which doesn't seem great if the economy is growing at 3%.
Well, nominally, it's growing at 5%.
But suddenly it's growing at 3%. And so maybe the government only 1% accrues to the government, but what accrues to the private sector in terms of stock markets going up, in terms of people getting wage increases, in terms of... It seems to me that if you can generate 3% on a sustained basis and still have revenue going up overall, it doesn't need to match the GDP. It just needs to stay stable or go up because the private sector is reaping so many benefits from the growth that you're getting. And then I think about, the only problem is that the deficit has gone up, as you said. But then I think about when the deficit doubled with 1.9% growth. We didn't even get anything for the doubling of the deficit for 8 years.
I think we're at a different point now. The US has reached a point where it's at potential or even operating above potential.
They said that 2 years ago, though.
Well, I think the working age population is growing, 0.2%, even if productivity accelerates to maybe 1.5%, then long run, you're looking at potential growth of sort of below 2%. And that's with, unemployment is already as low as it's been.
Well, wait a minute. It's not below 2. So you're assuming it goes back down to 2.
Yes, long run.
We'll
So
see.
this
I mean, you don't.
3%.
People didn't think we could do it even this year.
Yes, I mean, I think we always saw growth being pretty strong this year because of the fiscal boost.
3%.
You get another good year next year, sort of 2.5%, and then after that you gradually trend down to sort of 2%.